Welcome to you both. And Daryl, I'll just start with you. What jumps out the most to you about this home price appreciation that we're seeing?
It's just remarkable how strong the housing market is when the rest of the economy is in turmoil. And I think it speaks to how different this pandemic recession is from other recessions in the past. People have changed their relationship to their home, and we're seeing this big game of musical chairs where people are swapping homes to get what they really want.
So one more question on this. Are you seeing these gains across the country? Are they concentrated in the suburbs? Is there an offsetting effect in the places that people are leaving?
Home prices went up in every single metro that we track, but you do see a difference between the urban core versus the suburbs. The suburbs and more rural areas are much hotter than some of the downtown areas, and the downtown areas that are the weakest are in San Francisco and New York City.
Yeah, that makes sense, Diana. As we know, we've been reporting on this for a long time now, for months. So, Diana, how high can home prices go? I mean, are we going to look at this as a one-time surge because there was this huge flood of people looking for housing as quickly as they could get their hands on it? Or is it possible that it could be sustained for some time?
Well, look, affordability is weakened, and there's only so much people can pay. We have record low mortgage rates. That's giving people additional purchasing power. But as we start to see more supply hit the market, which hopefully we will if the home builders continue to ramp up as they're already doing, then you'll see prices start to cool off a bit. It's all about that very intense demand and that very short supply. You're looking at markets where supply is down anywhere from 20 to 40% year over year, and that's in large cities and small cities, and especially in some of those small to mid-sized cities like Oklahoma City or Nashville, which are just seeing a surge in buyers there who are moving out of larger city areas. And I would note also that while San Francisco and New York are seeing this big urban flight, other cities are still seeing a lot of demand within the city as long as there are residential neighborhoods like this one here in D.C. We're in the city limits, but this area is incredibly hot because you have homes that have large spaces, you have backyards, you have outdoor areas. And that's really what people still want, is to be close to the urban core, but just have that kind of space.
And Diana, how is the psychology working in the housing market right now? Because obviously back during the bubble years, the higher prices went, the more interested people got. Are we seeing any signs of that yet, or does it seem to be acting in the normal way, which is to turn people off?
Well, no, I mean, I don't think you're seeing a bubble in home prices yet because you're continuing to see such strong demand. We also, in the last case 10 years ago, people were flipping homes, pushing home prices higher because they were using faulty mortgages. That was no money down, very poorly underwritten. Anybody could buy a house. That is absolutely not the case right now. You must be fully underwritten and you must be able to make those monthly payments or you're not going to get a mortgage. So the finances that are going into today's housing market are much stronger than they were 10 years ago. You also have a tremendous amount of home equity in the market, trillions of dollars collectively that people are just sitting on because home values are so high. So I don't think home prices can get out of hand if people can't afford them, but as long as they are well underwritten and we have these low mortgage rates, you are going to see home prices push higher until you see more supply.
And Daryl, a question to you on that, because we've debated this for the last several weeks in particular, whether the underwriting standards are too tight, which, you know, again, no one wants them to be too loose again, but people are saying, you know, there's this massive amount of homeowners who could qualify for a refinance out there, but in some cases, even that paperwork or those standards are just too difficult. So are you seeing that, you know, this is a constraint on housing activity, that it far from standards being as loose as they were in the bad old days, they remain too tight?
The biggest constraint is the supply. So even if everybody who wanted to get a mortgage could get a mortgage, there wouldn't be enough homes for all of those people. So the people who have the most money down, who can make all cash offers, who can waive contingencies, they have an edge, and that would be true whether or not the banks loosened their lending standards.